use collective if you want. Oh, why did you not? That's why, because I'm pressing PN.
What's wrong with the tongue?
What freaking Manfin and June 1. Oh, yeah. And the teacher? What did I want to do?
Oh my gosh, I can find selected then.
And what if Chantal wants?
Yeah. Hello. Thank you.
Please do not say that on the street. I know. It's going from 69. Absolutely. Working group? That's the thing, I don't remember what it
Testing. 1, 2, 3. Is it moving? There we go. There's no weird sound here from my graphic. There's no weird sound here. Hi, Ross. Sorry. Testing. We're just testing them out. I'm the one moving this way. Yes, we're starting with Manfin today. I just hope everyone has calculators because today is Untitled Chapter. You'll be working today. Just that's a heads up. Okay. Yeah, I'm just waiting for a minute. Okay. I was just telling them that today is going to be a lot of working, so we'll be working through the tab together. So just make sure you have your calculator out and you have a piece of paper. Oh, okay. One more. Ooh. We can start. Okay, cool. Good evening, guys. How are you today? That's good. So today we'll be starting with Manfin, and then you'll be doing tax later. So this was an introduction to cost, right? So you were introduced to a lot of concepts, a lot of terms, a lot of ways we allocate or trace costs to cost objects. So how did you guys find it so that I know where I need to begin? Okay. So finding the cost drivers was where you were bit. It's different, right? Okay, that's good. The activity, yeah. It's not something you'd expect, right? Hey, you can come in. Cool. Okay. Okay. So how I structure my tutorials is if I give you an unseen, please attempt it. Okay. You don't have to, I'm not going to give you the solution, but we'll be doing the solution ourselves. So we'll be building it ourselves when we in the unseen. Okay. So I'll be going through the scenario sentence by sentence, looking at what we should have got, and then we will formulate the solution together and go through it together. Okay. So I'll be giving you different approaches every week on how to tackle these questions, and you'll be using these tools each time you attempt your tutorial, your scene tutorials. Okay, so I can get why it was a bit overwhelming because it's new concepts as well as not knowing how to structure your solution as well. So this week that's what we'll be focusing on. Okay, so I'm just gonna do a bit of recap because I know it's new and everything. So I'll do a bit of recap on what you guys did during the week, and then we'll delve into the unseen. Okay. Okay, so what costs do we allocate and what costs do we trace? This is just recap like theory from what you guys did. So what costs do we allocate? Yes, you can answer. What are overhead costs? What type of costs are they? Fixed. I'm looking for something more than fixed. Yes. So we allocate indirect costs because you understand that an indirect cost is a cost you incur anyway, but you're trying to you're trying to allocate it to how much your cost objective contributes to it. That's what allocation means. We're trying to allocate this cost in order to make sense of how it drives our costs. Okay. What costs do we trace? Direct costs, right? Do you agree that a direct cost is very easy to see that, okay, no, this is what it actually costs? Okay, cool. What are the different cost behavior terms we use? So how do costs behave? So they can either be fixed or, yes, variable. Exactly, right? So there are different types. So once you understand those different types of terms, you start realizing how they behave. And when you realize how they behave, you're able to see what type of tools you can use to be able to make sense of it. So this is where the cost functions come in, right? Because you understand for a mixed cost, there's a variable and there's a fixed component to it, but you need to be able to separate the two, because what if the question only asks you for the variable portion of the mixed cost? Do you see where those come into play, those little tools that I gave you? Okay. So what are cost functions? I just gave them out. What are cost functions? Well, they are functions we use, so mathematical expressions we use in order to describe the type of costs that we can use. So it's like a formula we use. So instead of giving you, so I will give you all the costs you need for a certain period or number of units, right, that we've produced. But do you agree that if I give you a mathematical expression, you're able to just use that expression instead? So because what if you have one more unit than what you produced? Okay. So in the high-low method, what do we base it on? Do we base it on the highest expenditure, or do we base it on the output? So in the high-low method, right? So it's the cost function. It's a part of your cost functions, right? Remember when you have a mixed use when you have a mixed cost, right? So there's this method that we call the high-low method, which separates your fixed cost to your variable cost. That's how you get your y is equals to a plus bx, right? Your mx plus c. In essence, it's the same thing. Now, what I'm asking is, what do we base it on? On output, right? That's true. We don't base it on expenditure. It's based on your output. Okay, cool. And what are the different cost systems that are used? So normally companies now, it's either you use your yes or the absorption or yes. Those are the type of costing systems that are used. So this is just a recap to show you that all these terms and all these calculations that you'll be doing are all interlinked. Don't think about it in isolation. In a scenario, you'll be given information, but do you agree that I've given you the tools to be able to separate the mixed cost? You know what to do. Okay. So look at it in that way. Be broad about your thinking and your problem solving. Don't just limit it to, but I learned this week, but only last week is applicable. Do you get what I mean? Because I can give you a tutorial next week that will still use the same principles you learned this week for next week. Okay, so don't learn in isolation, please. Are we good? Any questions on the contents that you've done this week? Was it good? Now there's a bit of light. Okay. This answer is based on activity-based costing, so you should be fine. Is there a question? Cool. Okay, so the unseen. I just want to know how many people have done it, just so that I have an idea. Did you read through it? Did you go through it at least? Just one sentence attempt? Okay, not bad. Not bad. Okay. Just going forward, even if you just read it to have an idea, please do that so that when you're in class, you're not lost. Okay. And that you can be able to fix your understanding as you go instead of having to do it on your own. Okay. So we'll be reading through the scenario and then we'll be highlighting the triggers that we identify, okay, to see where we can come up with our solution. Okay, so Pineapple Express Proprietary Limited, PE, is a privately owned South African entity. What comes to you when you start reading? So the jump between what you used to do in undergrad and what you'll be doing from now on is that every single sentence has a meaning and it might affect something that you don't know. So from now on, when you read a scenario, you need to start putting down your triggers. What does this trigger? So that when you start formulating your solution, you don't have to go back and reread stuff. So you should be writing down the little notes that you pick up when you're reading. Okay. So we see that it is a company and it's privately owned. Do you agree that if something is privately owned, do you agree that the sources of funding from being privately owned are literally only based on from those private owners, right? You can't just go into the market and say, hi guys, or onto the JSE and say, hi guys, can I please get shares? It's going to be very difficult for funding. So you need to start thinking about those little things from now on. PE is a health conscious company that has been manufacturing vitamin since 1942. So this is a health company. So do you agree that health companies are generally highly regulated? So you need to start thinking, oh, there's possible red tape that could occur. And since 1942, it's 2022, that they're pretty established. So you can be comfortable with the fact that they've got systems in place that are operating. So you need to start thinking about those type of things when I start giving you such information. P's current financial year is 28 February 2021. So we're dealing with the current financial year. So what is a financial year? It's 12 months. So meaning it started on the 1st of March 2020 to the 28th of February 2021. You should be writing that next to it, okay? Just so that it's there. The company is situated in Johannesburg, which is great. PE specializes in the manufacturing of vitamin-infused lollipops and cookies. So now we're seeing what they actually make and sell, right? So now you start to be thinking, okay, this is a manufacturing company, so therefore there's could be a possibility, a lot of labor, a lot of materials, and a lot of overheads that could possibly be there because they are manufacturing. So you need to start thinking, what are the types of costs that would generate these lollipops and cookies, just to give you comfort. The management of P is currently reviewing the results for only the month of February 2021. So do you agree that the information that will be given is only February? So it's only for 1 month. But had I given you information for 12 months, do you agree that you would have needed to divide by 12 to get to 1 month? So you need to start reading with intent and seeing and making sense of everything, because things can change in the required. Okay. They tell you that they operate using a standard costing system. So a standard costing system basically is when a company sets its own standards and says that this is what we will be producing at. So this month, they set the standard that they're only going to produce 30,000 products. Whether they go above and below, that's when we start making sense of the information. This is where variances come in, but we will be focusing on standard costing soon. So don't be alarmed by that. Just know that it's a standard that they set for themselves and they should be getting to it. Okay. They tell you that the standard production information for February 2021 is provided below. So they give you the fixed indirect rental costs. What do we do with indirect costs? We allocate them. So you should be writing the indirect cost allocate, so that at least you have some comfort to know that if they ask me to allocate, I've already identified the indirect cost. I don't need to go looking for it again. Okay. They tell you that the other fixed indirect manufacturing costs in total are that. So you write there, we allocate indirect costs, right? Then they start telling you that the standard production equals standard sales quantity. So this is what the goal that I'd set for February, to say that we need to produce 300,000 lollipops and 420 cookies. So that's production and sales. So what I produced, I was supposed to sell. Okay. Then they tell you that the machine time needed to complete the edible is 1.2, 2.6. The direct raw materials, the direct labor. What do we do with direct costs? So do you see that I can directly trace the raw materials to the lollipops? I don't need to allocate anything. Cool. Which is simple, right? So you're supposed to be getting that mark. Then they tell you that the cooling time per edible is 2 minutes and 1 minute, and selling price per edible. Okay. So this is how I would have looked and populated my scenario when I got it, right? I'd be writing down these little pointers. When I say the triggers, this is what you do with the triggers. So you write down that I allocate the indirect cost. I trace this, right? This is production and sales to make life easier for yourself so that when you start doing your solution, do you agree that I don't have to go reading again because it's already there? I've made sense of the information. Okay. Okay. They tell you in the note, this was for the note for the machine time needed for per completed edible. They tell you that half the time per unit is related to the mixing and the other is to packaging. Okay. We don't know what it's for, but we need to take note of it, right? Then they tell you, except for the items below, all actual production agreed to standard production. So do you agree that we met our standards, but there's some things where there were exceptions? So each lollipop used 0.6 minutes of machine time, and each cookie used 2.1 minutes. We said for machine time, we should be using 1.2, right? So, and 2.6 for cookies, but we actually used less than what we should have, which is a good thing if you think about it, because that means we either are efficient in our machine time or our labor, the packaging people are just so good at what they do that they just need half the time to do it. Okay. So do you see how you're starting to make sense of the information? You're just not letting it be. You don't know what this information will be used for in the required yet. They tell you that 20,000 lollipops and 50,000 cookies were not sold in the prior year and therefore form part of opening inventory. So do you agree that this 20,000 lollipops and 50,000 cookies, we didn't produce them this year? So they can't be a part of what we produced this year. So do you agree that if we calculate it in our current production, we're double accounting? Then they tell you that 310 lollipops and 450 cookies were sold at a price of R1.80 and R3.60 per unit respectively. So that's great. We have our selling price. Perfect. They tell you that the standard direct costs and standard other fixed indirect manufacturing cost equaled actual costs for the actual production volumes. So therefore, we don't need to do anything to the standard direct costs and other fixed indirect manufacturing costs. We don't need to do anything because it equaled our standard. Then they tell you that the closing inventory was 10,000 and 22,000 for lollipops and cookies respectively. Do you see from this information, did I actually tell you what we produced? Which is weird, right? But don't you think we can calculate it? How can we calculate that? How do we solve for X? Okay, so we've got opening inventory. Yes. Okay. Production, right? So that's what I'm saying. So you should be looking out for those pointers. I didn't give you production, but now you have to solve for it. So in this time, you could have solved for it on the side as well, instead of waiting, because you don't know what you'll be doing with this information yet. Am I making sense? So your tests are structured in a way that you'll be getting the scenario first and the required after your reading time. So that's why I'm approaching it this way, where I'm saying that you don't know what the information is leading you to. That's why I keep saying that. Okay. Yes, you can. It's actuals. Yes. Yes. Cool. Oh, so they were just asking that the information that we just read now, if it's actual, and the one at the top is budgeted. So it's your standard and your actual. Okay. And then they tell you that there are recommendations from an independent consultant. They tell you that PE's management has been investigating the advantages and disadvantages of using the current traditional absorption costing system, with indirect costs being allocated to units based on machine minutes, or alternatively, introducing an absorption costing system. So what do we know about traditional absorption costing? We allocate based on something, right? It's very fixed, it's very rigid. It doesn't take into account any influxes of maybe production, or maybe the machine went down and, now we're using more time. So do you agree that they're giving you two information? Now they're trying to lead you to say that, hey, we've been using this system, but now we want to introduce a new one. So are you seeing that? I'm introducing that part here. Okay. Then they tell you that PE's management employed an independent consultant to evaluate its current production process to review the possibility of implementing an activity-based costing system to allocate its indirect costs. What do we know about activity-based costing? What do we actually need for activity-based costing? I need indirect costs because that's how we allocate them. What else do I need? Yeah. So identify the activities and what else? The cost drivers and what else? The cost driver rate. The rate that you will be allocating to. Okay, don't forget that. Okay. Now we start getting information about this activity-based costing, right? They tell you that he estimated that 40% of the other fixed indirect manufacturing costs relate to mixing of ingredients by the machine, 35% relate to cooling the edibles on the cooling racks, and the remaining 25% relates to the packaging of the edibles by the machine. So don't you agree that these are my costs and my cost drivers? So for mixing, what do you think is my cost driver for mixing? The mixing time. So, but then what drives the mixing time? The machine, right? It's there in your. They tell you that the mixing of the ingredients is by the machine. So it's the machine time. So that's what drives the mixing because it's done by the machine. That's what drives the cost, the machine time. Are you seeing that? Do you see how I don't have to explicitly tell you that? Okay. 35% relates to cooling the edibles on the cooling racks. So do you agree that cooling, what drives the cooling? Okay. We're getting there. We're getting there. And the remaining 25% to packaging of edibles is done by the. So what drives the packaging? Correct. So the machine. So I need you to start making sense of these cost drivers. I won't explicitly tell you all the time, but I need you to be able to identify them. And you identifying them actually makes or breaks you getting the marks. Because if you identify it incorrectly, you won't get the mark. Are you seeing that? And it was there. I told you it's by the machine. It's not something out of the ordinary. Okay. Are we comfortable with that? Cool. Then they tell you that the P paid the consultant 40,000 to perform the review. The production lines of both PE's products are equal proportions of the rental space and equipment. What about the rental space? What do we know about the rental space? It's an indirect cost, right? What do we do with indirect costs? So don't you think it should be a part of cost drivers and costing because we're allocating? Why? Why are you disagreeing? Don't you think we should include it in our allocation? Why? No, you're allowed to disagree. I just want to know why.
Whether this activity is there or not there, the cost is there.
I agree, but it's an indirect cost. It's not a direct cost. And remember, I told you that it's an indirect cost. And what do we do with indirect costs? We I gave you that the production lines of both use equal proportions of the rental space. That is your driver, the rental space. So do you see how the little finer details actually help you? I don't just give you information not to just use it. Okay. Always go back to the principle. We know that rent is a fixed expense, but I told you that it was an indirect cost. And what do we do with indirect costs? We allocate. And based on activity-based costing, you need a cost driver. And what drives the cost? The rental space. Okay. They told you in equal proportion. So both products use equal proportion. So it would have been 50, 50. I don't have to give you numbers. I don't have to give you numbers. So it's the little things, okay? So don't get caught out by those little things. So that's why I always tell you guys to write the little things down. Just write there 50%, like I did. Okay, let's see if we got all our triggers. Okay, so what I would have written down as well. So I would have written down a pointer that opening stock is not a part of current production, so that I don't make the mistake to double account it. Because remember, we had to solve for production, right? I also told you that's how much is sold for, so therefore we might need to calculate something with profit, maybe, maybe not. They told you that closing inventory, so we produced that this year as a part of current production. They also told you there's another costing system that we want to introduce, so we must be comfortable with all other costing systems, right? And they told you what the traditional absorption costing allocates its units on. So do you agree that it will be units divided by machine minutes? Write that formula down so that you don't forget it. The traditional absorption costing system, they told you that their traditional absorption costing system allocates its production, so its units, based on machine minutes. So do you agree that you can calculate that, the machine minutes, on what you produced? Because from the production that you'll be calculating here that we had solved for X, that is your production. Don't you agree that I've given you the machine time already in the table? So you'll be multiplying it by that and dividing it by the units produced. So that's why I'm saying that make sense of the information, write down these little pointers so that by the time you go back and answer the required, it's not nothing new, that you're comfortable enough, okay? This is why we do this. Because the scenarios are going to get longer. It's going to be more information. It's going to be too much for you to go back and to have to reread. Therefore, you'll be wasting time. And we don't want that, okay? You want to be able to answer everything. Are there any more questions before we get into the required? We're good. Everyone's comfortable. Cool. So I just also wrote down how much the other indirect manufacturing costs will be. So I wrote it down just there so that I'm aware, right? So the 40% machine, 35 cooling, 25 packaging. You're trying to make your life as easy as possible. Okay, let's get into the required. Don't be shocked by the mark allocation. You should start getting used to this. Your first test is out of 50, really. So don't be stressed about it. You should be comfortable enough by seeing 21, 13, 4. Sometimes it's a 50 marker. You just never know. Don't be shocked by the mark allocation. So the more the marks, that means the more things that you must do, which you must be comfortable with. Okay. So what you need to be doing when you start reading required is giving yourself time. How much time do I have for this question? So you should be taking the 20. So you're supposed to, each mark is 1.5 minutes. So you should be saying 21 times 1.5, 13 times 1.5, 4 times 1.5. So this question was about 58.5 minutes long. So it's not too bad. But how I would have structured it is that I would have read through the required, skimmed through it first, see what I can do first, read it again to see what are they actually asking me for. And the third read, I would have read it to see which one I'll be starting with. And then I would have took about 2-3 minutes from the times so that at least I'm not working overtime. You'll get used to it as time goes. It comes with technique, but it doesn't come just overnight. Okay, they asked you in the first required, using activity-based costing, calculate the indirect costs in total to be allocated to each product as per independent consultant's recommendation. How would you have tackled that? So I'm asking you to use an activity-based costing. So we've identified what we needed, but how would you have structured it? Yeah, your tables. Yes. Yes. You put the activity, yes. Driver, yes. Total cost driver. Yes. Yes. Correct. So you're right. So always have that in mind, okay, and stick to that. Don't do anything else because you're going to confuse yourself. 1. 2, you won't be able to get all the marks because as a marker, I need to be able to see your train of thought. And the tables help that, and it makes your life easier as well because at least you have some confidence doing that. It's in a table. I know that this goes with this goes with that. And even if you do make a mistake, I'm able to see it and you won't get penalized all the way through. Okay. So this is what I would have been this is what I would have expected to see, right? So I would have expected to see the cost name, the total cost, the cost driver, the total cost driver, and the cost driver rate. So I'm going to give you a minute to fill in what we just did, and then we'll see if you got it right. Should I go back to the table? Do you guys have it? Or did you guys do it? You guys did it, no? No, this is incomplete. This is incomplete. I'm just making you guys do it. Do you want me to put the rest of the... Okay, cool. You guys saw, right? So this is your template. So I'm going to give you 10 seconds to write down the template. And then, or you can take a picture and then I'll take it back to the scenario. So at least you can see where's what. Okay. I told you you were working today. Okay, let me take it back to the information. So there's the indirect cost that we're allocating. And that 40. So is this making more sense now? Is it making more sense? Yes, you can ask. Yes, you can ask. Okay. We haven't... They told you that your standard direct costs and your standard other fixed indirect manufacturing costs equaled actual costs and actual production volumes. So do you agree that it's equal to your budgeted? I agree, but your costs were equal to your standard. Because I told you that there. Yes. We'll be using standard. Yes, because I said the cost is equal to the production volumes. So the volumes, your standard volume. So we would have used that. Yeah, I know it's weird. I know.
So I guess
We'll get to it when we do the solution. We're doing the solution. Is everyone done? Okay. So it's supposed to look like this, right? So this is what we used. Did you get these answers? Didn't you get these answers? Just to see. So first we had to, did you get it? No, it's fine. Yes, it's fine if you did to 2 decimal places. Yes, it's fine. Because I did say round off your answer to 2 decimal. I just did it like this too, that it's 4. So do you agree now? Yes. You based it on your actual production. Standard. Percent sure. And yes, I'll tell you why. Because of that sentence, that's why we had to use standard, not budget. Standard, not actual. Because our cost was standard. So you need apples with apples. Unless I tell you otherwise. This is where standard costing comes in, where we start realizing what we budgeted to use and what we actually used is different. And then this is when we'll have explanations for those differences. Just not now. Later. Yes, it'll make sense, but yeah. Okay. So do you see where we got our answers from? I will post the solution. This just so that everyone gets into the rhythm of working with activity-based costing, okay? So we used our standard machine times. We didn't use our actual production times. That's why we've got 72,600. Yes, that's what you actually use to allocate. That's the whole point of activity-based costing, is to get this rate in order to allocate our costs to the cost to allocate to the products. We don't use, do you agree that this is the total cost of my other indirect costs, right? Don't you agree? So this is the allocation that we use for the 40, 20, 25. But do you agree that I can't just allocate this to a product? How will I know what each one did? This is why we calculate the cost driver rate in order to allocate it based on what that product used. So it shows whether or not the lollipop used more machine time or the cookies used more machine time. So this is why the allocation now will be more accurate, because it's saying that most of the time the cookies now are using the machine, not the lollipops. This is why we are making losses, or this is why production costs are so high. So it gives us more information on why the costs are the way they are, and to be able to make more informed decisions on the products. It, no. So it's what you use to allocate this cost to. Yes. Oh, sorry, typo. Because they said it's equal proportion. So the lollipop is going to get 471, and the cookie is going to get 471. There's no, do you agree that because it's an equal proportion? Let me go back. They told you that they use equal proportion of the rental space and equipment. The total is that 900, so we just have to divide it by 2. It was just to throw you off. Yes, it is 100. I was just saying 50 so that people know that it's. Oh, okay. No, it's just 50 just to show that for the lollipop it's 50, and yeah, it's just for illustrative purposes. The solution, the formal solution will be posted. This is just for tutorial basis. Cool. Oh, no, it's fine.
When you write the rate,
No, this is just for illustrative purposes to show you that it's 100, yes, but each is 50. Yes. Are we good? Can we move? But the question had asked you for the total, right? For the products. It didn't ask you to leave me with the table and make sense of it, right? So, do you agree that, so we talked about the rent, it's 50-50, right? Now for the mixing, now you start going back and saying, okay, how much of the mixing did Lollipop use based on the machine hours? How much did the cooling use based on the cooling time? And how much did the packaging they used? So from this, do you agree that Cookie uses more of the indirect costs than Lollipop? Do you see that? Okay. Now we're able to start making sense of it, right? Okay. Let's go to required B. Now they're asking you to calculate the actual gross profit per unit of Cookie for February 2021 using your answer in B and on the traditional costing basis. So do you see that there's two required in one? I'm asking you to calculate based using activity-based costing, and I'm also asking you to use based on traditional costing. So what would you have done? Based on ABC, you already have the amount you have, right? So you've got your allocation for your indirect costs. So how do we calculate actual gross profit? It's that's it, right? But we've got different types of costs. We have direct, we've got indirect costs. So do you agree we already have our indirect costs? We just need to divide them by how much we produced. Does that make sense? Because we have the total. I asked you for per unit. Don't let me catch you out on that. I asked for per unit. And you calculated the total. Okay. So what was our sales? It was 1 rand, 80 cents, and 3 rand 60, right? What was our direct cost? Cool. I'd given them to you. You just use them. You just add them and use them. Okay. So this is just your structure so that you have, right? Please write it down and see if you will get the answers. We've got a minute. Are we getting there? Do you need 30 more seconds? Okay, that's fine. Okay. We should be fine. Or do you guys want to do the traditional one as well? Okay, just do both. So at least we finished all in one. So they told you that the traditional based costing allocates its units on machine time. So your indirect cost will change. Okay. 10 more seconds. Okay. So for absorption costing, for ABC, sorry, we've got our selling price, we've got that was given. That should be easy marks, right? Our direct costs too, because they were there. You just needed to add the two together and get, right? Our indirect cost, you agree that we just needed to take our indirect cost total that we calculated in our answer previously, and we needed to just divide it by the number of production. Okay? Do you understand why we're doing that? Yes? Mm-hmm. Yes, but it's not that way. Remember, I'd given you your opening inventory. I just didn't give you production. So you needed to work backwards. So that's why I'm saying that it's not the way, like opening stock minus. You have to do it in that format, but you need to work backwards because I didn't give you production. I gave you sales. So you needed to work backwards. Yes. To calculate the production. And from that amount, it's here. You'll be using that as your production units. Yes. Oh no, you're just doing that to get your unit recon. Yes. Yes. Because remember, we're doing it for the current year, and I'd only given you information for this month. So if I don't give you any other information, don't do anything with it unless I push you towards it. And this question wasn't testing lost costing. Okay. So are you guys comfortable with that? Just with ABC, we haven't done traditional yet. Yes. Yeah, but we're not there yet though. Oh, true. See, that's why. See, this is why I said in the first. So she said that she made a mistake by not including the rent because she thought it was a period cost. But I told you that when you look at the type of cost that it was an indirect cost, and you needed to allocate it and still include it. That's why in our first answer we included it in our allocation. That's why we were able to use the total indirect cost and just divide it by the production units because it was there already. If there's no indirects then you don't include it. Then you would have included it as a direct cost if it's there. If it's a manufacturing overhead, do you agree that you have to include it because it's a part of manufacturing costs? But you wouldn't have included as an indirect cost. You would have included as a direct cost. So that's what I'm saying. The different types of wording that I use, you need to be very careful and cognizant because each have a different effect. Are we seeing that? Okay. Are we comfortable with that? So we're taking our previous answer, this, right? And we're dividing it by this. Yes. So in your production, right, you have opening stock of 20,000. I'd given this to you. Your current production, your actual production that you actually sold, right? This was also kind of given. And I'd given you closing stock. You had to work backwards to get to here. So that's what I was saying. The trick here was knowing, did I actually give you production? I didn't. I just gave you what I sold. And we're dealing with manufacturing costs, which are your production. Yes. So that's what I was saying. I'd given you just enough to use, but you needed to know what to look for. Okay, are we comfortable? So that's what I'm saying. Some information will look like it's right, but you actually need to make sense of it. Okay, are we comfortable? Yes. It's just, but I get you though. I get you. So we're comfortable with that, right? Cool. So for traditional costing, do you agree that our selling price and our direct costs are going to be the same? So you should be getting those marks. The only difference will be our indirect costs. That's the difference. That is the crux of this question. Now, the allocation, right? We had to allocate it based on our machine minutes. Our total indirect cost, we mustn't forget our rent. That's why it's 1, 2, 2, 3, 800. Okay. Are you seeing that? The total indirect cost. Because you don't believe me. It's 943,800 plus 2810. Those are the total indirect costs that we're allocating. Remember with ABC, it was great. They told us that this needed to go to mixing, cooling, and packaging. This is rental space. That was the cost driver, 50/50. This was 20/30, and we needed to allocate accordingly. But with traditional, they don't do that. They just take both these indirect costs and allocate it to just machine time. That's the difference between traditional, right? Now, we need to now calculate how much of those how much of the products each use machine time. Do you agree? Because we're using machine time. So how much of our current production, so we've got our current production, right? Which was 300,000. Right? How much time did lollipops need for machine time in general? 1.2. Yes. Yes. I know it's 3 here, but yeah. Yes. Yes. So, and then you continue with lollipop with the same thing. But now, because I asked for, do you agree that I asked for a rate per unit? I didn't ask for the total. So now you need to get your allocation of lollipops over the machine times and multiply it to get the unit. So I mustn't catch you out on the little things, okay? And that's how you get your gross profit. I will be posting the solution, so don't stress about that. I just need you to understand the principle behind everything, okay? Don't focus too much on the numbers because the numbers will change. They always change, as you've seen with your tutorials. So who gave us a bigger gross profit? Traditional, we've got for Lollipop 0.66 and 0.32, right? But for ABC, we've got negative 0.97 and negative 0.96. So do you see how the allocation of your indirect cost can make or break anything? Now it looks like Lollipop is making a loss, but in actual fact, they're not. No, they are making a loss. Sorry, I swapped them around. At first, it looked like they were doing good because they were making a profit, a gross profit. But with ABC, do you see that they're not? Do you see that? Do you see how a costing allocation system can make or break? Because now you probably were going to give more resources to Lollipop just so that it could be better. But do you agree that that wouldn't help because they're already making a loss? Now you're able to make sense of the information. This is why we use the different costing systems. Are you seeing the difference? The last question had asked you, when indirect cost allocate, which indirect cost allocation method would you recommend? Pineapple would use, and justify your answer with specific reference to the scenario. What would you recommend? Just off the bat, just from our discussions, from the knowledge that you have, what would you recommend? Why do you recommend ABC? Why is it better? So it gives more accurate information. How do you know this? No, not because we just calculated it. You can continue. You're right by saying it gives more accurate information. I just want to know how. How does it give more accurate information? What drives the cost, right? What else? So we agree that it's because it gives more accurate information because it allocates costs to what drives the costs. What else? Yeah, there was a lot of theory on ABC. It's faster. It's more efficient. It's complex, but it's more accurate. With traditional, do you agree that it just use one allocation based on machine time, but they have cooling time as well? They don't take into account the other factors that contribute to the costs. It was a black and white approach. It didn't take into account any other things that affect the costs. Do you see how you're supposed to be applying to your scenario? Because I asked you specifically to apply to the scenario. So with discussion questions, I want you guys to always relate it back to the scenario. I want you to always see that you are able to apply your theory, but from the scenario, I need to see that you're able to apply it. So for instance, I asked you which method you would recommend. I need you to apply it to tell me that using the traditional base costing system, it seemed like Lollipops was making a profit and it was positive. But when we used ABC, it's making a loss because now we're taking into account all the other cost drivers that affect the indirect costs that were allocated. I mean, there's more. But in essence, this is just trying to show you that this is how you're supposed to. You can't just say it's efficient. Okay, what about efficiency? Because now you're giving me theory. I don't know how long the theory is really, but I'm trying to see if you fully understand based on the information that I've given you and if you're able to make sense of it. Okay, let's read some answers. So they told you that they should use activity-based costing. So they traditionally allocated indirect costs based on the machine hours used by the two products, which is true, right? It's like that blanket rate approach that we discussed, right? They just use one thing. However, this is an arbitrary cost driver, as not all indirect costs are driven by the machine hours, as we discussed, right? Because it was the cooling time. They told you that only mixing and packaging costs are driven by machine hours. ABC is a better cost allocation method as it provides a more accurate measure of resource consumed. Well, we'll get that mark, right? As by using cause and effect cost drivers. The rental cost is driven by the space used by each product. The cooling cost is driven by the cooling time used by each product. And ABC focuses management's attention on activities rather than products. So it doesn't focus mainly on the product, mainly focuses on what drives those costs. Activities are what cause a company to incur costs. So it's more cost driven and what drives those costs and why do we allocate them. The accurate allocation of costs is important for decision making purposes, selling prices. Do you agree? So now that would have been our basis for what if we wanted to sell at a profit of 10%. Do you see that we would not be making an accurate prediction? Which you'll get into more when you start going into costing and, selling strategies. Some you'll do in CTA, some you'll be introduced this year. Okay. Any other questions? The solution will be posted. Yes. You'll make sense of everything. Please go through this TAT again to see if you really understand activity-based costing. It was actually a good TAT to see if you guys are able to approach and know how to identify your cost drivers and know how to allocate using your cost drivers, getting those rates, and even your traditional, how to see how we use that, how to calculate a blanket approach rate, I mean. Okay. Anything else? I had to tell you that so that you don't have to calculate a variance. So that's where I was telling her that this is when I told you that they use the standard costing approach, then if anything were to differ from the standard that they set, would have to have an explanation for that. And this is when we compare our standard, our budget, to our actual. And this is when you start getting what we call a variance, which explains why our standard was different from our actuals. But you'll actually be doing that later in detail, where you'll be doing proper variances for all of the costs in general. So your labor, your overhead, and. Because it is a system that you need to be comfortable with. Yes. Alrighty. Anything else? So you guys will be doing your TATs next week, right? Okay, thanks. Okay, that's it from me. You guys can consult. If you have any questions, you can pop me an email. And yeah, till next time. I'm done. Oh, you have a question, huh? Yes. 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 For this week. Yes. It's a lot, I know. I know it's a lot. But yeah. But you guys get time though, so you get Thursday till Monday. So you do 2 subjects on Tuesday and then you do 2 others on Thursday. So it's all about how you're going to balance it out. Yes. But we do recaps in the first 15-20 minutes just so that you're comfortable with the content. If you feel like you don't understand anything, email us so that we can further explain it to you. Okay. That you don't have to do this alone if you don't understand really. So don't be afraid to ask questions. I know some concepts the mind just doesn't get them, but we're here. Okay. Alrighty. Thanks, guys. How many minutes? 5 minutes. and then we'll start in 5 minutes. So at 20 past or 21. Oh, at 18:24 you'll resume. Okay. Thanks, guys. Okay. 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 I don't switch it to.
Let me just mute the mic.
How do you unmute it? Is it here? Or the...
So just click that little.
Have you started? Good evening, everyone. My name is Balisa. I wasn't here last week. I'm your tax academic trainee. Yes. So I completed my undergrad at WITS. It was a bumpy road, and then we completed our CTA with IAS. I was with them last year and decided to become a tax academic trainee because I enjoy tax. I hope you also going to enjoy it. It's a very nice module if you invest in it, right? So quick rules with my tutorials. Please bring your tax ledge every week. Every week, don't miss it. If you leave it in your car, I will ask you to go fetch it. We need your tax ledge, right? Number two, I would like if you guys see the unseen tutorial, attempt it before you come to class. I would expect you to identify triggers. I expect you to ask me questions if you get the triggers wrong, because there's a lot with tax. You need to understand why we have identified this particular section, why we're applying it. It's not a re-lecturing session, right? I also expect you to go through everything. Watch the videos, download your module outlines, download your examinable pronouncements because we need them to highlight. Not all sections are examinable in here, so we don't want you to highlight everything. Highlight what is examinable and also use your module outline to highlight, right? If you don't have a technique to highlight your tax legislation, you're more than welcome to consult with me. I also think it is important, especially when you're working under exam conditions or exam pressure, right? Your mind is all over the place, and if you don't have a way to highlight your tax legislation, you could be lost. You might end up spending time reading the tax legislation and not answering the questions. All right. I also want you guys to attend your unseen sessions. It's not a way to build your test ones or your formal assessments in general, but you need them so that you pass. I give you guys exam technique. I tell you common mistakes and what I don't expect you to do in your papers. So please make sure that you attend them. If you have friends who did their BCTA and are now in CTA, you can ask them. You can ask them how tax went and why they did well. So these unseen tutorials are necessary, and it's also not a substitute of what you need to cover. We also upload lecture content. You still need to go through it, right? Ask questions. Feel free to consult. If you think I'm intimidating, you do have your silk textbook. You can go through everything. If you still don't understand, then you don't have a choice but to consult. Like set an appointment if you don't get it. Right? Balisa at ias.ac.za. Are we good? Are we all good? Awesome. Cool. So how many of you went through your week one content? Is there a question? Last week's content. 2. Okay, we'll see. We'll see today. We'll see today, right? So, have you guys seen the what is the computer doing? Yo, we need to change that computer. We must all love tags. Please. Are we back? Are we good? Alright, so we're back. So we're just covering the general definition, special inclusions, and deemed inclusions, right? So we already said our general definition of gross income is in Section 1 of your Income Tax Act. You also find your special inclusions in Section 1, right under the general definition, right, of your gross income, right? So if you have your tax legislation, we have the general definition, which is We will break it down in a few minutes. But right under the general definition, we have our special inclusions, right? And they have their own paragraphs. So please make sure that you open your examinable pronouncements as well as your module outline. Highlight what is examinable, right? So examinable pronouncements will tell you which sections are examinable and which are not. So please make sure that you highlight that way and you highlight all of them. We might not get the time to cover everything, but I'll make sure that we select tutorials that cover all special inclusions, right? By the end of your semester, you will know your special inclusion of a dividend, of salaries, or of annuities, but make sure that you highlight what is examinable. Are we good? Cool. So deemed inclusions. Who can tell me what deemed inclusions are? What is deemed? Right? Something that's created is not actual. Do you get? So when you read your tax legislation and you come across the term deemed, know that SARS made it up. So if it's a deemed inclusion, they expect you to include it. Don't ask me any questions. It was made up. If it's a deemed inclusion, we add it. Are we good? So if you come across the term deemed, which you will a lot, know that it was made up. It's not actual. It's not how we have special inclusions. Special inclusions are actual, right? So deemed inclusions are found in Section 7 of your Income Tax Act. They're not in Section 1. Are we good? So who can tell me the value, a sign of income? Because that's a trigger as well in your exam. Does it have a positive value or does it have a negative value? That should be your starting point. What is income? Does it have a positive value? In your statement of financial position, no. Is it comprehensive income? In your statement of comprehensive income, does it increase your net profit or does it decrease? It increases, right? So anything that we include in our taxable income, that is gross income, will increase the final amount that we need to determine so that we calculate our final tax. So if it's gross income, it has a positive value. If it's a deduction, it will have a negative value. That's a topic we will cover next week. For now, our main focus will be on gross income. Like we said, it's the new Section 1 of the Income Tax Act. Special inclusions also in your Section 1. Gross income definition, which is a positive value, and exemptions, which we will cover at a later stage. But exemptions is what we have included initially, but SARS allows you to take it out. So from that principle, you first need to include it before you take it out. And that's why we have a definition of income in Section 1 of your Income Tax Act, right? It tells you any net amount. What does it say? Don't want to lie to you. Do you see? It means the amount remaining of the gross income was included in your taxable income, right? Of any person. Any person doesn't mean you're an individual. There's also a definition of a person in your Income Tax Act. It can be a company, can be a trust, can be a natural person. So the moment SARS talks about an individual like you and I, they refer to us as natural persons. So if you see a person in your tax legislation, they're not just talking about us. So be careful with that. Are we good? Cool. So it says any amount remaining of the gross income definition of any person of any year of assessment or period of assessment after deducting therefrom any amount exempt. Where do we find our exemption principles? In Section 10. Right there. Are we good? So this small block is what we will be covering. And can you tell from this framework that there's also a definition of Section 1? I don't think we can zoom. Ish. It's already a full screen. I'm so sorry. Do you want me to adjust it now? Ish. Alright. Let me. Oh, it's a picture. I'm so sorry. It's a picture. But they are in your slides. Right? Are we good? So this is what we'll be dealing with. Gross income, special inclusions, exempt income, and income. for this week. Are we good? Cool. So here's the definition of gross income, right? The general definition, what I've been telling you guys about, right? So it starts off with who has opened the gross income definition? Is that you? I want you to follow, right? Cool. So it says, in relation to any year or period of assessment, where do we get this principle of period of assessment? How do we know that a natural person's year of assessment starts from the 1st of March to the 28th of February? Do you guys know about that? Right? Where do we find it in our Income Tax Act? Section 5. Everything we say about tax is in your tax legislation. Make it your friend and you will know about it. Are we good? Cool. So in the case of any resident, have you heard of the term resident? It will be covered, the full topic will be covered at a later stage. But for now, just know that a resident is taxed on worldwide income, meaning if they have investments in foreign countries, they will have to include it in their taxable income. Do you see? Worldwide income. Any income they receive, any deduction they need to make will be included in their taxable income. But if you're not a resident, you will be taxed on source, amounts that are received in the Republic. Do you see? So one thing these two parts have in common is the elements you're about to discuss, right? And the only difference is that with I, which deals with the definition of a resident, it just tells you that you will be taxed on worldwide income. And the one that is other than a resident, meaning you're not a resident, you'll be taxed on source. Can you guys see it? Source within the Republic. And that is not what you have in the first paragraph. But everything else.
Switch your Wi-Fi to.
Yeah, I'm not connected. What is it? Destination CA? Just CA, no, not guest. Nah? Okay. All right. I hope this is the last time I minimize my screen. I hope. But yeah. Are we good? Okay. So, like I said previously, the only difference between the first two paragraphs is that with a resident, you are taxed on worldwide income. And if you're not a resident, how do we know that we're dealing with a non-resident? It says other than. So the moment your tax ledge says other than, it's excluding, right? So you can put it on the side because I'm not going to teach you everything in your tax ledge. You also need to know how to read it, right? And there are some terms that are really tricky, but if you have like the simplified version, then you will be able to read the whole tax legislation on your own. If you still don't get it, feel free to consult. We'll break it down together, right? So the second part is for non-residents, and they will be taxed on source, amounts that are only from the Republic, from South Africa. Are we good? But everything else is the same. Total amount in cash or otherwise received by or accrued to or in favor of such a resident. Why do you think we need case laws to conclude whether an amount needs to be included in terms of the gross income definition? Why do you like? Why do you think? Use the definition of income to answer your question. No one. Okay. So there's some terms in your income tax definition that are pretty straightforward. We read the definition of income. It tells you gross income plus special inclusions less exemptions. It's straightforward. But there's some terms, total amount is quite vague. What do you mean, right? In cash or otherwise. What's otherwise? Received by or accrued to. That's quite broad, right? So we need case laws to determine whether an amount should be included in terms of the gross income definition. Do you guys see? So there are some terms that don't make sense. One of them is also your resident definition. We will cover it at a later stage. Are we good? So there are some terms that are vague, and we need case laws to conclude how we should recognize it in our taxable income. which is what we are doing with the gross income definition. Are we good? So cool. It also says during such a year or period of assessment, excluding receipts or accruals of a capital nature. We don't know what that is. What is capital? What are they talking about? Right? But we will cover it at a later stage. But including, right? It started excluding receipts and accruals of a capital nature, but it's including what? Without in any way limiting the scope of this definition, such amounts, whether of a capital or not, so received or accrued as are described here under namely special inclusions. So anything right under the general definition will be included. We don't have to question whether it's capital or not. If it's salary, we don't even have to go as far as using accrued to case laws to include it in our gross income. If your scenario says it's a salary, include it as is. That's why the last paragraph is telling you whether it's of a capital nature or not. If there is a special inclusion for it, put it in, right? That's what it means. So you don't have to go through your case laws to determine whether an annuity should be included in a taxpayer's gross income. Are we good? So those paragraphs, just include. If you see a dividend, don't think about case laws, just put it in there. Are we good? Cool. Why isn't it moving? What's going on? It's not moving. How? Okay, this is not tax day, hey? Let's just conclude. So, elements of the gross income definition. I just made a list of what you can discuss using the case laws that are uploaded on your LMS. So, it's your responsibility to go through those case laws. Don't wait for the last hour to cram. I also don't want you to cram. I want you to understand those case laws, right? There are a lot. And you can be tested on any case law. So it's better to understand the background so that you remember. What's nice about case laws is that their backgrounds are quite similar to what you can find in the paper. So you can easily identify a FISA case, have it as your shorthand, and wait for the required to tell you to discuss using case laws or something. Do you understand? So know the story behind it so that when you go through your paper, if it is tested, you know which case law to apply, right? And it is also incorrect to identify cash or otherwise as your trigger and use received by or accrued to principles. There is a specific, like there are case laws for specific elements in your gross income definition. And the only way to know this is like going through everything, understand everything. Please make sure that you spend time understanding those case laws. If you don't understand, consult. No, but back then they did. They did. It was so nice. But they were thick, and I don't think students wanted to carry that huge tax list. But no, no, we don't have case laws. Don't have anything. You need to understand them. Don't cram, understand. And they will always show up. I'm telling you now. There are those last 10 marks we don't know where to like allocate. We'll come up with a story and expect you to give us a case law discussion. It'll always be there, not just in BCTA, CTA as well. Ask your friends, they'll tell you. Yes. Okay. So the question in class is, do we need to know the case law names? The answer is no. You need to know the principle. I will know which principle you're applying. You don't have to know the names at all. So you can say there was a court case that held that 1, 2, 3, 4, 5, 6. I will know which principle you're applying. Right? So you don't get marks. That's another thing with tax. Please unlearn the principles that were taught in your institutions, right? So at IAS, we make sure that whatever we teach in class is in line with your ITC. Do you understand? And if you don't believe me, I'll make sure that I find a question that tested case laws to see how we mark. Do you get? So go through that ITC paper and see if what we're saying in class is in line with what the standard of SICA in general. Do you understand? So I know there were students, those students who had their own exam technique, but it didn't give them marks. It wasted time as well, right? We'll go through it as we cover our unseen tutorial. But these are the elements that we use to determine whether an amount should be included in terms of the gross income definition or not, right? Here's another thing. All the requirements will be met except for one or two. So look for that element that is vague. We can have all elements. You can find that an amount has been received, so we can't discuss receipt by because it's clear, it's there, right? But is it of a capital nature? That could be your missing element. So we use case laws that relate to amounts that are of a capital nature to conclude whether we should include it in our taxable in our gross income or not. Are we good? So you don't have to go through total amount in cash or otherwise. Yes, an amount is in cash. Received by, yes, an amount was received. Don't do that. Just look for one missing element and focus on it. We'll go through the exam technique together now. But that's one thing you shouldn't do. You will be wasting time and you won't be getting any marks. Are we good? Cool. So here's our exam technique. I'll say it out loud because I can tell that it's not clear there. I'm very sorry, right? So step one, state what must happen for an amount to be included in terms of the gross income definition. All the requirements need to be met, right? For this certain amount received by this person, all the requirements of the gross income definition need to be met in order for it to be included in this person's taxable income in terms of section 1 of the gross income definition. You just state one. You don't also repeat the definition. You'll also be wasting time. Just tell me what must happen for an amount to be included into the gross income definition. All the requirements must be met. But you're also using company names. You're not being generic. Are we good? That's step one. Step two, identify the issue that needs to be discussed. This is what we have discussed. What is vague in this scenario? An amount is received. Is it accrued? Is it capital in nature? And you will use those elements to determine the one that is vague. And you focus on it. You get a mark for correctly identifying the missing element, that vague element. Are we good? Cool. And the burden of proof in terms of section 102 of the Tax Administration Act. Now, this is a heavy section. All you need to know is who is responsible for determining the amount. It could be the taxpayer, it could be SARS, right? So when we go to the elements, if you think about it, gross income will increase your tax, right? So who do you think would want to determine that amount? SARS, right? But of a capital nature, we just have an exception, which is amounts that are of a capital nature, because when an amount is capital nature, have you guys heard of capital gains tax? Yes, right? So you include a certain rate. You don't include 100%. Are we good? So it would be your responsibility to prove that an amount is of a capital nature. Because what ends up happening is that you have an opportunity to include a small amount in your taxable income. We will cover it at a later stage, but just know that you don't include 100% of the proceeds that you have received that are of a capital nature. It goes through the 8 schedule. Don't stress about it, but just know that the burden of proof for an amount that is of a capital nature is on a taxpayer. But anything here, the first 3, it will be on SARS, because they would want to include it in your taxable income. You need to pay tax. They will make sure. Are we good? So you get a mark for telling me the burden of proof in terms of section 102 of the Tax Administration Act. Just cram it. I'm allowing you to cram that section 102 of the Tax Administration Act. If you don't want to, you can still go to the Tax Administration Act section and highlight it, but you will find it there. Are we good? Not lying to you, but yes. So on step 2, you get 2 marks, the issue and the burden of proof. Are we good? State how the element identified is not defined, and you should therefore refer to case law, right? So we can have one student here who can look for the definition of total amount in cash or otherwise in your Tax Administration Act. It's not clear. We don't know what that means. That's why we need case laws to determine whether an amount should be included in terms of the gross income definition. So you are telling me that I'm about to use a case law to prove that an amount should be included in terms of the gross income definition. Do you see? You might get a mark, you might not, but it's really good to be complete. We used to get marks, but now it depends on how we feel, right? It really does. So, but just make sure that you have everything there. Are we good? Now, do you understand that you already got 3 marks before even applying to the scenario? Do you see the importance of having an exam technique? So please make sure that you use your exam, especially for case laws. I'm telling you now, it's important that you have this exam technique. The main goal is to score easy marks, right? If you don't have it, then you'll be in trouble. I'm telling you now, right? Cool. Now we are getting into it. Now we're using the scenario that we have given to use tax principles. So step 4 says, state the principles needed to determine whether an amount can be included in terms of the gross income definition or not. So that is standard. That is up to you. You took it upon yourself to make time to understand those case laws. You have identified your own triggers, and you think this one is the right case law to prove that an amount should be included in your gross income definition. You state it. You state that principle. Doesn't have to be word for word, but it must make sense. If it's for your own benefit, I need to see where it's coming from. That's the Geldene's case, right? You don't have to know it word for word, because the moment you do that, I could tell that you are cramming. You need to understand. And at the end of the day, those keywords will pop up. Are we good? So understand those case laws. Cool. So you state the principle as is to get a mark. Don't mix application with principles. You are missing a lot of marks in there. I wouldn't give you 2. They need to be separate. Are we good? So state that case law and then apply to get 2 marks, right? You apply to the scenario. I have given you the information. You just tell me, okay, this is in line with the principle that was stated because of this and that and that and that, right? So you must apply to the scenario. Don't be generic. Don't use terms like taxpayer, terms like SARS, terms like a company. I would have given you those names for a reason. So use them, because that is application. Are we good? And then we conclude. We conclude. And your conclusion should be in line with your application. Are we good? So you can't say, no, this court case stated 1, 2, 3, and your application is not in line with that principle, and then your conclusion is something else. Are we good? Please make sure that everything is in line. We are good. Are we okay? Do you have any questions? Cool. Now you guys have a tax question book. I will be uploading your scene tutorials until the end of the month to give you guys time to get the tutorial book, right? Now, in August, in the first week of August, I'll just be uploading your scene tutorials, solutions, right? Not just questions. For now, for the whole of July, I'll just be uploading questions and solutions. But from August, please note that I'll just be uploading solutions, right? You will use that question book to practice, right? And you might find that they're not using the exam technique that I've given you, which is fine. But stick to this one. This is the ITC standard, IAS standard, CTA standard. Do you understand? So when you read in that solution, it will be in line with what you have written. But make sure that you stick to this exam technique. Are we good? Awesome. Is it? It's not. And I don't upload my slides. I will. I'll upload. I'll upload the slide. It's fine. So that you have this exam technique to practice. Are we good? Cool. So we are done with the general definition. We are done with the first part. This one. How? Okay. The general definition, the first part. Now we're getting into special inclusions and deemed inclusions, right? Cool. So special inclusions, I have previously mentioned that it's in your gross income definition, right under the general definition. So I'll call it general because that's where we use our case laws, and right under that we have special inclusions. Please highlight them. If they don't make sense, open your silk to see the simplified version. If you still don't get it, because there are a few examples that you can go through in your silk textbook. If you still don't get it, feel free to consult. But you will come across many special inclusions while we're doing the tutorials. So you will know how to include them, because there are some special inclusions that need specific calculations in them, right? I think it's paragraph H with the lease improvement. You need to include the present value of that amount, but there's a certain way that we calculate it, and there is an example in your silk textbook that shows you how to. If you still don't get it, consult. But it is your responsibility to highlight all the sections that are examinable. Are we good? Don't ask me why I'm repeating this now. Just don't ask. But you already have a picture. So you do not need case laws to conclude whether an amount should be included in your gross income for special inclusions. I have stated that. I'm repeating. And the last paragraph says you only have special inclusions from paragraph A to paragraph N. So go through all of them and see what they're all about. Right? Are we good? And then we have deemed inclusions. I did state previously that SARS can create an amount for you, right? If SARS makes it a deemed inclusion, you will include it in your taxable income as a positive value, which will increase your tax. And where can we find it? It will be from section 7.1 to section 7.2 cap C. Have you guys heard of splitting 50-50 if spouses are married in community of property? It's one of the sections. It's section 7.2 cap A, which is also quite tricky, right? Because it depends on the income that you have received as a taxpayer. If you've received it from trade and your spouse is not part of that trade, you can't divide it in equal portions, right? But if your spouse is part of that carrying on trade, you also don't do it in 50-50. You only divide it based on the participation in that trade. So if you find that your husband has 80% involvement in that trade, whatever income they receive will be 80% on the husband, 20% on the wife. Do you understand? So it's a special. How would you know? You will read the section, you will highlight. If you don't get it, then you come to me. But I'm just giving you the simplified version of what happens if you have income that is derived from trade and you and your spouse are married in community of property. SARS doesn't want you to split the two. But if it's passive income and if it's rental income, then you will have to divide in equal portions, unless that asset does not fall into your joint estate. Do you see? Are we good? But there's also a principle that I learned today, that you also need to see where the money is coming from. So if you inherited cash, right, you understand that your spouse is not part of it. And if you used that cash to buy an asset, that's a trigger for not dividing it by 50% to give it to your partner. So you need to see where the money is coming from before you conclude. Are we good? Cool. So go through everything. The important one is section 7 cap B, but we will discuss it at a later stage when we're dealing with individuals. So you must have an employer-employee relationship, but that is at a later stage when we're dealing with fringe benefits, travel allowances. You have heard of them before, right? We will do it at a later stage, but just know that it is very important because you have a special paragraph C, where you are receiving an amount by virtue of employment, right? That's a salary and any amount you receive by virtue of employment. But section 7 cap B makes everything specific. If it's a commission, it can't be included in terms of paragraph C of the gross income definition. And the timing is quite different because in section 7 cap B, you only include an amount when it is paid. But if it's a gross income timing, we look at the earlier of receipt or accrual. Are we good? That's why it is important to read your sections. Are we good? So if you see an employer-employee relationship, you can't just conclude that an amount should be included. First, you need to look at your variable remuneration definition. If it's not there, then you will include it in terms of paragraph C. But if it's there, you know that there's a specific section for it. You include it when it's paid. You can only know this by reading your tax legislation. So please take it seriously. And I'll know. Cool. 7C and 7D will be covered at a later stage because it deals with interest. Interest is a CTA topic, so you don't have to worry about that. But there will be a time where I teach you how to calculate your interest. We calculate interest based on days and not months. So if you have a calculator, we will do it together, just not now. But this part will be covered at a later stage. Talks about when SARS owes you interest and when they should pay that interest. So you might come across a question that expects you to calculate what SARS owes you. It's quite complex. You'll see it on CTA. Are we good? Cool. Now we're in the unseen. Cool. So this was your unseen. This was the test 1 2022. So I chose a question from a past paper because I want you guys to see the importance of having an exam technique, right? This is their test 1 in the first semester. The question is out of 12, so you multiply that by 1.5, but we'll talk about the exam technique later. We first need to look at part A. We'll go through it together. Also note that you don't get the required first. So because you're starting with the required, I prefer breaking down the required so that we know which triggers to identify. But this is not how we test you guys in your formal assessments. We first give you the scenario, reading time, and then give you guys the required at a later stage. Just how Khali has done her touch earlier. She broke down the scenario and broke down the required thereafter. Are we good? So cool. First part, briefly discuss whether you agree with the income tax treatment of the 950,000 proceeds received by Squeaky Clean. So we already know who we are dealing with. We're dealing with a company. Well, we don't know yet. No, Squeaky Clean. So we know our taxpayer is Squeaky Clean, right? Refer to relevant case law to support your conclusion. I didn't have to tell you that, right? There was an ITC question that asked for gross income consequences without telling you to refer to case law. So if you don't know your gross income too well, then you could have been lost in interpreting the whole thing because you're just used to being told to refer to your case law definition. So we don't have to tell you. The moment we deal with Section 11, the moment we deal with the gross income definition, case law should just be triggered, right? Are we good? Cool. Your answer should only consider gross income implications. I was just nice. It was their first test, right? I don't have to tell you that as well. Are we good? You do not have to calculate the correct treatment, just advise on it. Cool. You also get a mark for communication skills. It's not mandatory. I can just give you 8 marks. Like I don't give 1 marks for fun. I might just give you 8 marks. So what I'm saying is you don't get communication marks by default because you're discussing a case law question. All right. This is just being nice. So what I do is that I take out the 1 because I don't work for it. 1 is just for attempting the question and you have attempted it nicely. Your conclusion is in line with the application. I just see if you deserve that 1 mark, right? So I would take out the 1 mark and multiply my 8 with 1.5 to get my writing time. Are we good? Because we don't want to waste time and stick to your writing time. We will know if you're not, right? Khali has mentioned it earlier. Multiply your marks by 1.5 and stick to that time. It's an exam technique because it is important to attempt all your required. You don't want to be marked out of 30 if it's a 50 question paper, if it's a 50 mark question paper, because you're also not sure if you're going to get 100%. So it's safer to just attempt everything, right? But if you're that good, are we good? But please make sure that you attempt all your questions. Stick to your writing time, right? And I would use that remaining 1.5 to see if I've answered everything, if I've labeled my questions nicely. So yeah, it also comes with practice. If you have a SEAM tutorial, they have marks there. Multiply by 1.5. And if you want your reading time, multiply your writing time by 0.2. Right? That will be your reading time. Exam technique. Because you also don't want students who read slowly. If you're given 30 minutes, stick to that 30 minutes. Are we good? Cool. So you already know that the first question deals with case laws. I've identified so many triggers, right? We will get into the scenario now. So part B, what are the normal tax implications on the 30,000 dividend and the 23,800 interest received by Squeaky Clean in its taxable income for the 31st August 2022 year of assessment? Your answer should refer to the applicable income tax provisions, right? So if the required tells you to discuss all tax implications, it's your responsibility to discuss VAT, Income Tax Act, and CGT for now. In CTA, there are many taxes that you will be introduced to, but for BCTA, if I state that all normal tax implications should be discussed in this required, you need to consider VAT, Income Tax Act, as well as the CGT when there's a disposal. We will cover it at a later stage. But if it just says normal tax implications or income tax implications, they are talking about the same thing. Your main focus is from section 1 to whatever this income tax act ends. So from section 1 right up until the end of just your income tax, right? Are we good? So you also need to know how to break down the required, right? So from this question, we have identified that the year of assessment is 31 August 2022. So I would have a timeline as well. Tax has a lot of transactions that you might have to break down. Make sure that you have your tax framework. So if it's 31 August, so I always say plus day minus year. You plus it by 1, you get 1 September minus the year 2021. So that's how you start your timeline. I struggled with this a lot back in second year. So if you're just like me, then that's your life hack. Plus day minus year, right? 1 September 2021 right up to 31 August 2022. Out of 3 marks, easy marks if you know your tax legislation, and we're good to go. Are we good? So let's get into the scenario. So Squeaky Clean Limited, right? We already know that it's a company because it ends with limited, right? Is a resident company. What does that trigger? It's a company that can be taxed on worldwide income, right? So if they receive foreign interest, we include it in their taxable income and account for it accordingly. If there's a special section for it, we also consider it as well. Because at a later stage, you realize that if a resident company or a resident person, when they receive a foreign dividend, they don't qualify for the normal section 101K exemption because that deals with local dividends. There is a special exemption for foreign dividends, right? So please take note of that. Dividend is not accounted for the same way. If it's local, we consider section 101K. If it's a foreign one, we consider section 10 cap B. It's part of your exemptions, but you will see it quite a lot, right? You don't have to worry about that. As a resident company, what else do we know about companies? How are they taxed? Do we use tax tables to determine their normal tax payable? Which rate do we use? We use the rate of 28%, right? Unless it's a small business corporation. We will deal with it at a later stage. Don't worry. But if it's a company and it's a limited company, because one of the requirements of an SBC does not want you to be a public company. You're either a private one or a closed corporation. So I would already know in December when you're writing your final exam that it's a resident company and it will be taxed at 28%. That would have been my trigger if I am asked to calculate what? My normal tax payable. Are we good? With a year of assessment that ends on 31 August 2022, 1 September 2021, right up to the 31st of August 2022. Where did we find that principle? It's in section 5 of your Income Tax Act. If you're a company, then your year of assessment is your financial year. If you're a natural person, then your year of assessment ends on the 28th of February, whatever year that is in question. Are we good? Cool. So Squeaky Clean manufactures cleaning supplies and renders cleaning services to companies in the hospitality industry situated in Johannesburg, Durban, and Cape Town. So they were just telling us what they do, right? But I would have identified manufacturing as a trigger for an asset and an output. So if you went through your case laws, you would know that there's a case law that tells you what a tree is and what the fruit is, right? So there is a case called the physic case that tells you that if an asset, the tree is an asset that produces an income, is an asset that produces an income. And then the fruit is the income, is the output. Do you see? So what makes the income will be the tree, and the output of that tree will be income, right? So the tree is capital in nature, and the income, which are your cleaning supplies, will be revenue in nature. So whenever we sell the cleaning supplies, we can include it in our gross income because those are receipts that are not of a capital nature. But if we receive an amount that relates to assets that relate to manufacturing cleaning supplies, then it will be of a capital nature and we can't include it. Because one of the requirements of a gross income definition does not want your receipts and accruals to be of a capital nature. Are we good? Cool. So it also has retail outlets around South Africa which sell cleaning supplies it produces. That's another trigger. Okay, my cleaning supplies will be the company's output, and then whatever asset it uses to produce those cleaning supplies will be capital in nature, right? Using the physic case. Are we good? The Commissioner of the South African Revenue Service regards the manufacturing of cleaning supplies as a process of manufacturing. So this is important for your capital allowance topic, which will be covered at a later stage. But the moment you see assets that form part of your manufacturing process, what will trigger is Section 12 Cap C, right? Because that's the section we use to claim our capital allowances. There's a lot going on, but I would have, in December, when we know everything, I would have said Section 12 Cap C. But we will cover it at a later stage. You don't have to know about it now. Are we good? So in October 2021, you have your framework. You need to check whether it's within the current year or not. It is within the current year. CY as my shorthand, right? One of Squeaky Clean's manufacturing machines broke down due to lack of maintenance and repairs. What did we say about machines that form part of producing cleaning supplies? Are they capital or revenue in nature? Using the physic case, they're capital, right? So it broke down. Cool. The machine was new and unused when Squeaky Clean acquired it on the 1st of July 2019. Is it in the current year? It's not, right? So it was new and unused. You didn't have to know this at this stage, but it relates to Section 12 Cap C for claiming allowances, right? We will cover it. Don't worry. It was just to confuse you. We can do that as well. We can give you unnecessary information and then you have to determine whether you need it or not to answer the required. That's why you need to know everything. That's why you need to understand your principles. Are we good? So you didn't need that for that question, right? So on acquisition, a cost of 30,000 was incurred to transport the machine to the factory in Johannesburg, right? So that was a cost necessary to bring the asset into use. If you go to financial accounting, any amount that is necessary to bring that asset into its present condition, and there is that term, will be capitalized. Capitalized is the term I wanted to use. So it's similar in tax. If there's an amount that is necessary to bring that asset into use, so we use the term bring into use in tax. Financial accounting is ready for use. At a later stage, when you're in CTA, we could get integrated questions. We might confuse you because ready for use and brought into use are two different concepts. Do you understand? So know the difference now. When it's brought into use, we talk about tax and when we can start claiming capital allowances. When we talk about ready for use, that's a financial term. They tell you when to start accounting for depreciation. Depreciation, wear and tear are not the same. Know that now. They're not the same. Are we good? Cool. So Squeaky Clean fortunately had insured the machine since the 1st of July 2019 and paid monthly premiums which are deductible in terms of Section 11A to the value of 1890. So you guys have not yet covered deductions. Yes, it will be covered next week, right? It's also a case law concept. So there'll be a lot of case laws in July that you guys need to go through. So make time for it. You don't have to know that part because you don't know about deductions. But if you were writing this test, you would have known. You would have known what to do with the 1890, right? So Squeaky Clean filed an insurance claim in October 2021 on the machine, and the insurance payout to the value of 950,000 were received on the 15th of November 2021 to replace the broken machine. An amount was received, right? That's a trigger for gross income. If an amount has been taken out of the company, you would think about deductions. So if there's money coming in, think about gross income. Money coming out, deductions. If there's a special way to account for it in your taxable income, do that, right? So I would have written income because it would increase my tax. Are we good? Cool. So money received, income, we plus, right? On the 15th of November 2021. Is it within the current year? You would have known because you have drawn your timeline already. Are we good? So Squeaky Clean's accountant included the 950,000 as gross income, as he thinks the amount is received on behalf of and for the benefit of the company. Is it correct? Who thinks the accountant is correct? Don't let the title confuse you. Think about it. Who thinks the accountant is correct? Would it be correct to include the 950,000 in this person's taxable income? After breaking down the scenario with you right now, because it relates to the machine, not the cleaning supplies. By show of hands, who thinks the accountant is correct? Do you think he's correct? Okay. Who thinks he isn't? Okay. 1, 2, 3, 4, 5. What do y'all think? The accountant is wrong. You don't think. So I should have asked, is the accountant correct or not? I should have been, all right, noted. Yaku, you don't know. Okay. 3, I really want you guys to participate because I won't be next to you when you write this paper. So, is he correct or not? There's no right or wrong answer. Don't worry. You think he is. You don't think so. You think he's correct. You wait for second block, please. Wait for second block. Okay, no problem. So you must understand why the payout was given to, why there was a payout to Squeaky Clean. It was to replace the broken machine. What is a broken machine? It's a capital asset because we use the FISA case to determine whether the amount is whether the machine is capital or revenue in nature, right? It was a difficult question because there's actually another case law that makes things simpler, right? To show that any amount to fill a hole that is of a capital asset will be capital in nature. And any amount that is used to fill a hole of an asset that is revenue in nature will be included in terms of the gross income definition. So you needed to discuss 2 case laws to answer this question. We need to introduce the FISA case. We need to identify the parts that relate to the machine, right? We did state that the machine is capital in nature, cleaning supplies are revenue in nature. Now we have received an amount that relates to a capital asset. There is a specific case law for it, and you will only know it if you go through that case law summary. I actually found out that there is a video for case laws. So it was nice of them to keep it for CTA students. So I will share it with you. Make sure you watch that video. right? It's a YouTube link. You just need to copy and paste, and I think it tells you when the case laws start. I think it's from 3 hours 50 minutes right until I don't know where, but it's quite in detail. It's quite straightforward, right? But I would want you to go through those case laws first. Go through it on your own, and then look at the video later. How many are there? How many? How many case laws? Yeah, there are lots. There are lots, and it's not just for gross income. It's not just for. If you think about it, we have total in cash or otherwise. For that required element, we could have like 3 to 4 case laws. Received by, we could have like 3 to 4 case laws. Accrued to 3 to 4 case laws. If you combine them, that's just for gross income. We also have for deductions. We have for trading stock. We have for VAT. There's actually a recent one that is examinable now called the clicks case. So they keep on coming, and there are a lot. Just don't wait for the last hour to know them. So there are many case laws for online streamers. I'm preparing you now. There are a lot of case laws that you need to go through. Yes. Yes. So the question is, do we need to stick to the case laws that are listed in the examinable pronouncements? The answer is yes. Stick to those. There are tons and tons of case laws out there, but we have specific tax case laws that we want students to know. Yes, so stick to the examinable pronouncement. Make that document your friend. Please make that document your friend. Are we good? You will find everything there. Are we cool? Yes. Any more questions? Do you have questions online? All right. So it's fair that you think you would have included this amount in your gross income. Another thing about papers is that there are different accountants out there, right? They might have been taught tax a different way. If an amount is received, we include it in the taxable income in terms of the gross income definition. We don't have to go through case laws. If it's an amount that has been received, we include it in our tax. But we have those, like the ones in class and the ones that are online, who know that we first need to go through the case law principles to determine whether an amount is gross income or not. Do you understand? So you might find that the scenario has an accountant who has included amounts in a certain way. Overlook the title and stick to your SARS principles. Are we good? They could be wrong. And that's also an extra mark to say, the accountant was incorrect. Because what they ended up using is that they used the element of received by. There's actually a case law for amounts that are received for your own benefit should be regarded as gross income. But they didn't think of accruals and receipts that are of a capital nature. Do you understand? So he was somewhat correct, but not really. Because he identified a wrong issue. We can't discuss received by because we already know that there was a payout of 950. That's obvious. We just need to determine the nature of the 950. That is what's vague. And we can't use accrued to because you are not entitled to it. It's either you are entitled to an amount or you have received it. We can't have both, but you can have both in the scenario. There's a nice tutorial that I uploaded, African Incorporation, something like that. I even made comments on it because it was the first semester's unseen for the gross income content. It was a lot. I would want you to go through it. It's not a hint. I'm not giving hints. You must know everything. Do you understand? But it's good to know the difference between received by and accrued to. So if you take it back to high school, it's quite simple. If you sell on credit, you are unconditionally entitled to receiving that cash. You have already performed. You're just waiting for that cash, right? You're entitled to it. It has been accrued to you. But if you have sold an item in cash, you have received it. So there's no entitlement, there's nothing. You have received that amount. Do you understand? So know the difference. They can't apply at the same time, but it's possible for a scenario to want you to identify more than one element, right? So you can apply both of them, but it's impossible for them to go together. That's why I divided them. That's why I divided them in parts. Received by, it has its own case laws. Accrued to also has its own case laws. Are we good? Cool. So let's go through the solution, right? Having our exam technique in mind. Are we good? So the first part, in order for the 950 proceeds received by Squeaky Clean to be included in terms of the gross income definition, all the requirements of the definition should be met. State what must happen for an amount to be included in the gross income. We did state that all the requirements of the gross income definition should be met. You don't have to repeat the gross income definition. You'll be wasting time. So don't do that. Right? You get a mark. The issue is whether the proceeds received to replace a broken machine are receipts that are of a capital nature. Do you see how we didn't use accrued to? Because they were not entitled to anything. We can't use received by because they already received the 950,000. It can't be total amount in cash or otherwise because we already know that it's an amount in cash. So what's vague? Receipts and accruals that are of a capital nature. Are we good? You get a mark for stating the correct element that's missing. Are we good? The burden of proof that an amount is of a capital nature is on the taxpayer. Remember, I told you that you don't include 100% if you conclude that the proceeds or the amount you have received relating to a capital asset is capital. What did I say? Okay, you don't include 100% of an amount that relates to a capital asset. We think about case laws. No, we think about the 8th schedule, which we will cover at a later stage. It's capital gains tax. We will cover it at a later stage. So you don't have to include 100% of it. And SARS doesn't like that. They want you to include 100%. So you must prove why that amount is capital in nature. Because you don't include 100% of it in your taxable income. Are we good? You can go to section 102 of the Tax Administration Act to see it. Alright? Cool. You get a mark for telling me the burden of proof. Because you correctly told me that it's not SARS, it's the taxpayer. You also don't say the taxpayer, you say it's Squeaky Clean. You also don't say it's a company. I gave you names, please use them. And do you see how the application is in line with what I've been telling you? I'm not saying the issue is whether the amount received is of a capital nature. You need to tell me where the proceeds are coming from. What does it relate to? Are we good? It will be uploaded on LMS. Cool. We got 3 marks. How much is it out of? 8 plus 1. So we have 4 already. So it's 4 out of 9. We already have 4 out of 9. Before even concluding, before even telling me that the accountant's treatment was incorrect. Do you understand how important exam technique is? Cool. So you also tell me the court held that the tree is an income earning structure, remember, which is capital, whereas the fruit is what the tree produces to generate income and will thus be revenue in nature. How would we know this principle? We read our case law summaries. Are we good? And then you apply. The machine is an income earning structure, being the tree and therefore capital in nature, whereas the cleaning supplies it produces will result in income generation and is thus the fruit. So I would do this. I would apply as I state the principle. I wouldn't want to state all the principles and then apply later because you might miss those marks. Do you have a question? Or do you see? So state the principle, apply straight after. State the principle, apply thereafter to get those full marks. So we already have 2 marks. We added 2 marks in our 4 marker. So it's 6. Without even getting to the conclusion, without even getting into the main case law that tells us to fill in the hole. Are we good? So now we were also told that so the next point says the court held that an amount received to fill a hole of an asset that relates to an income earning structure will be of a capital nature, and if it relates to an asset that is used to earn income will be revenue in nature. There is a specific case law for it. Before you tell me the type of amount Squeaky Clean has received, you state the principle that, hey, So the amount received relates to the machine, which is of a capital nature. How did we conclude that it's a capital nature? We used the FISA case. Do you see there's order? That's why you get that communication skill. Everything flows. You don't just get it. You see. Are we good? You state the principle. So the 950 was received to replace Squeaky Clean's machine, which is an income earning structure. How do we know this? We discussed in the FISA case. Do you understand? And will therefore be regarded as an amount to fill a hole of a capital asset. This comes with practice. Don't be scared. If you practice, you'll be fine. Are we good? If you leave it for the last hour, things won't be nice. Are we good? So you apply, you add those 2 marks again. How much do we have? 8, right? Thank you. So the proceeds are therefore capital in nature, and Squeaky Clean will not include the 950 received in terms of the gross income in its 31 August 2022 year of assessment. That's a conclusion. I did not say the 950 must be included if my discussion was in line with things that are of a capital nature. Do you see? So your conclusion must be in line with your application. Are we good? You get a mark for concluding. Always conclude. Always conclude. Have that therefore. Please. Have that therefore. Apply. You get a mark. Conclusion is such an easy mark in tax. In everything. Make sure you conclude. If you miss that, you miss that one to max out the question. Are we good? So because we know, we also have to state that the tax accountant's treatment was incorrect, because the required wanted us to determine whether his treatment was correct or not. So that's the second conclusion, right? It was incorrect because he has not considered the principles of receipts and accruals that are of a capital nature when realizing the proceeds received by Squeaky Clean. They just saw an amount and they included it because they thought it was for Squeaky Clean's own benefit. They used the Geldenes case, and we didn't need that because we already know that the received by element has been dealt with. It's not big. Are we good? Cool. You get a mark. And then you also advise, because I also asked you to advise, right? We know what CGT is. You have seen it before, right? You might not have covered it, but you know what CGT is all about. If it's not capital in if it's capital in nature, we consider the 8 schedule. We talk about CGT. I also asked you not to show me the calculations. You just had to advise on it. That was a one-liner. The accountant needed to calculate recoupment and CGT calculation, which is found in the 8 schedule. We will cover it at a later stage. You don't have to worry about it. But even if you didn't get that mark, do you understand that you would have gotten 9 out of 9? Any questions? Okay. So the question in class is, did we have to justify why the 8 schedule was applicable? Why CGT was necessary? The answer is no. Because I would have given you that mark for stating that it's an involuntary disposal, but you're getting into how to calculate it. Do you understand? Yeah, so you just had to tell me that it's just a CGT calculation. That's what you should have considered. If we covered CGT, then it wouldn't have been a 10 marker. It probably would have been a 20 marker where you would be allowed to discuss your involuntary disposal requirements and tell me what must happen. How do we account for involuntary disposals? You'll tell me how your recoupment needs to be deferred, how your capital gains tax also needs to be deferred. You also show me your calculations of how they should be deferred, and then we conclude. So it would have been more, but I only asked for advising, not implications. Do you see? Don't worry, we'll cover it. Are we good? Cool. That was part 1. Under special inclusion. Okay. It's found in paragraph N. So when you go to paragraph N, it says any amount which in terms of any other provision of this act is specifically required to be included in the taxpayer's income, and that amount must for the purposes of this paragraph be deemed, remember deemed, to have been received by or to have been accrued to the taxpayer. So it was vague, and not a lot of students are aware of this paragraph. So we normally use section 8.4a because that's a section that talks about recoupment. If you go to section 8.4a, I'll read it for you. You have not yet what is this, covered it. So it says there shall be included in the taxpayer's income all amounts allowed to be deducted or set off under provisions of section 11 to 20. So it gives you a line of everything, right, that have been recovered or recouped during the current year of assessment. Do you see? So it gives you a list of all the sections that qualify for capital allowances, and then after those sections, it tells you that those amounts have been recovered or recouped. So when I recognize the recoupment in my taxable income, I used to say section 8.4a if it's a normal recoupment, because there are types of recoupments, right? There's section 8.4a, 8.4e for deferrals, and 8.4k if the amount in consideration was not of money or if it was between connected, because we will cover it at a later stage. But I would use section 8.4a because that's what we know. But if you want to be extra like that, paragraph N of the gross income definition. Then let's stick to 8.4a. You still get a mark. Are we good? Let's see. If it says person, it applies to everyone, right? Any amount in terms of any other provision of this act, no, it doesn't rule out. So if you meet the definition of gross income, because gross income talks about any person, right? So you can be an individual to account for it. Are we good? Cool. Any more questions? Do you have questions online? Okay. Exam technique. Thing is, there's no time, but we covered everything here. Are we good? We conclude, we get marks, we're good to go. So question 1b, remember it asked about normal tax implications for the 30,000 dividend that was received and the interest that was received. So can I have paragraph K, my brother, paragraph K of the gross income definition, section 10.1K of the gross income definition, section 10.1I. No, section 10.1K. Just section 10.1K, I'm sorry. Specific section. So paragraph K, section 10.1K, and section 10.1I to answer this, right? So we will go through it. Over and above the manufacturing of cleaning supplies and the rendering of cleaning services, Squeaky Clean also has investments in other resident companies, and they have received the following as of 30 August 2022. Right? So other resident companies, we already know that we are dealing with companies that are in the Republic. Are we good? Cool. A gross dividend of 30,000 from Coswell Limited, locally listed company. What do we do with dividend with the dividend that we receive? What is paragraph K of the gross income definition telling you to do? What is the paragraph K principle telling us? Exactly. So it says any amount received or accrued to by way of a dividend. We have received a dividend of 30,000. There is a special inclusion for it, which is paragraph K of the gross income definition. I expect you to know it by the end of block 1 because companies or natural persons always receive dividend, right? So just keep that in mind. And the exemption, is there an exemption for it? Section 10.1K. Are you on section 10.1K? What does it say? Do you see? So we're dealing with exemptions. Remember, we can only exempt what we have included, right? So we've included this dividend of 30,000 in terms of paragraph I of the gross income definition, and there is an exemption for it, which is section 10(1)(k), which says dividends other than dividends paid or declared by a headquarter, received by or accrued to any person. Do you understand? And there is an exclusion for when you read everything down, you will be told that it excludes dividends that are foreign. When you read everything, it's foreign because there's a special section for accounting for exemptions that are foreign dividends, which is section 10 cap B. We'll deal with it later. Like you will see it in your tutorials, right? No. So the question in class, does section 10(1)(k) exemption account for dividends that is local and foreign? The answer is no. Special inclusion in terms of paragraph K of the gross income includes both. When we're now dealing with exemptions, we need to determine whether it's from the Republic or from a foreign company. If it's from the Republic, it would be a local dividend. You will account for it in terms of section 10(1)(k). Do you see? But if it's a foreign dividend, we account for its foreign dividend exemption in a different way. And we use section 10 cap B to account for the dividend. It's just that we don't have time. I would have touched on the principle, but I'll look for a tutorial that has a foreign dividend to show you how we need to account for it, right? But for now, if it's a local dividend, you qualify for the full amount, right? Another thing about exemptions, you please be on the lookout when reading the principles, because what you're about to read, your section 10(1)(I) deals with interest. It's specific to natural persons. Remember, we are dealing with a company, right? So what ends up happening as a student under exam pressure, you would say, okay, I've seen this 23,800 before. It's a limit for interest. So you would have accounted for what? The interest exemption in terms of section 10(1)(I). But section 10(1)(I), it tells you that in the case of any taxpayer who is a natural person, it doesn't say any person. Do you understand? So Squeaky Clean wouldn't have qualified for an interest exemption. This was just to trick you, because there is an exemption of 23,800. So you would have seen it and said, hey, let us account for this exemption. So you're not allowed to. So don't just highlight. Read first before you highlight. Are we good? Know the difference between a person, natural person, a company. A principle will tell you. And if it's silent, it relates to any person, which is what we see in our dividend exemption, section 10(1)(k). Are we good?
So that any other case, yeah, it talks about age.
It talks about the age. So when you read everything, you will notice that there are different limits for interest exemption. So if we're dealing with a natural person, you will always be given an age of a natural person, because that affects your rebates, that affects your interest exemption. What else does it affect? I think it's just rebates and interest exemption. So you need to be, for now, yes, think about rebates and your interest exemption. So if you're older than 65, you will qualify for a limit. So these are the limits, by the way. So if you're a natural person and you're 50 years, meaning you're less than 65, and you have received 50,000, you would include that interest in your gross income definition. There's no special inclusion for it. We will discuss it now. We're actually not done. Yes, we will discuss it now. There is no special inclusion, but you use your case laws. If there's no special inclusion, what do? We go to the general definition, right? And we have already covered the FISA case. What would have happened for you to receive interest? You would have had a fixed deposit. That's a tree. That fixed deposit is producing what? Interest. which is your fruit. So I would have said gross income definition, and then you're good. Are we okay? Yes. So section 10(1)(I) is a limit. So back to my example. I'm 50, I receive an interest of 50,000, right? I'm younger than 50, 65. It tells you in any other case. So if you're not older, if you're not at least 65, and when we say at least, we are including the 65. When we're saying more than, then we're talking about from 66 upwards, more than 65. So we can't include 65. So those are the little things that could trick you in tax. It's important that you know the difference. But if you're at least 65, so 65 and above, then you would qualify for 34,500 limit, right? So you would include the full 50,000, and then you would have taken out 34,500 as an exemption. But in my example, I wouldn't have, because I'm 50, I'm younger than 65, so it will relate to any other case, which is 23,800. As a natural person, I would have qualified for the exemption of 23,800. Are we good? But back to the scene tutorial, we're dealing with a company. Company is not a natural person, so it will not qualify for an exemption. Are we good? Cool. So this was supposed to be our discussion. Dividend received of 30,000 will be included in terms of paragraph K of the gross income definition. We discussed it, right? However, there will be a full exemption of the dividend in terms of section 10(1)(K) because it was received from a resident company, which therefore constitutes a local dividend. Please discuss in detail, right? No shortcuts. Because what you're submitting as your test is a formal document. So if you're being casual, I'm going to be mad, going to be, angry, and I wouldn't want to be giving you marks if you're giving me shortcuts. So apply to the scenario and tell me why section 10(1)(K) is applicable. Are we good? Are we fine? Do you see how wholesome that first part was? You get 2 marks for it. Are we good? So the interest received of 23,800 will be included in terms of the gross income as it meets all the requirements of the section 1 gross income definition. Interest is the fruit of an investment being the tree, and a company does not qualify for an interest exemption. We just saw it in section 10(1)(I). Are we good? Any questions? No questions. Again, any questions? Yeah? Just what? Finally. Any questions? Do you have a question? Yes.
On the solution A, it's not easy determining it. Like, for example, if you use the taxable side, where you determine the main or the dominant purpose of the asset.
So there are assets that can have a dual purpose in a company. But you already know that a machine is a capital asset because it's specifically used to produce cleaning supplies. So there's no dual purpose for it. We are not having this machine with an intention to sell at a later stage. We're just using it to produce those cleaning supplies. So it just has one purpose, to produce cleaning supplies. So the moment you see an asset that has a dual purpose, it will be clear in the scenario. If one asset is used for 2 reasons, then you would consider that case law. Do you see? Cool. So you need to read the scenario carefully. Because the scenario would have said that this machine was used to produce cleaning supplies, however, Squeaky Clean has an intention to sell it. Or they use it to advertise. If they If they're in the business of selling machines, then they would use it to advertise. So it is used for cleaning supplies as well as for advertisement. Do you understand? So it has a dual purpose.
So if you argue that man using those resources and the expense is zero,
Pick and Pay, is it for profit making?
yeah, you like you say even the
Mm-hmm.
it's not able to maintain saving machine. That's what
So the question is, would we use the Pick and Pay case law to determine whether the 950,000 um, would be included in terms of the gross income definition? Mm, But here's the thing: they should be in selling machines for us to discuss that part. Do you understand? So we would use that case law if the question wanted us to discuss the cleaning supplies, because that's where we're making profits. That's where we're making sales. So in this question, we're dealing with a machine. So you need to ask yourself, is Squeaky Clean in the business of selling those machines? The answer is no. They just use those machines to produce cleaning supplies that are sold to other companies in exchange for money, which is revenue in nature. So Pick and Pay case law relates to things that are revenue in nature. So if the question asked about cleaning supplies, then I think Pick and Pay would have been the right case law to determine whether they're in the business of profit making or not with those cleaning supplies. But now we're dealing with a machine, which is a capital asset. Does Squeaky Clean sell capital? Does it sell machines on their day-to-day operations? No, they don't. So we can't use the Pick and Pay one. Are you getting it?
because when you discuss, you haven't continued.
In my discussion,
Yeah, when you
yes, you haven't concluded, which is why it is important to, number one, identify the correct element, which will guide you, right? It will guide you to the necessary code cases that you need to consider in concluding whether the amount is capital or not. So in this case, as I'm reading, I can see there's a machine. This machine is used to produce cleaning supplies. Okay, there's a machine and then there's output. There's something about this. There's a physical case. Do you understand? Then you have it as a trigger. So that's why I find it important to understand the background of the case law, because it's quite similar to what you find in the scenario.
so when you go to the case, you kind of have a view of what you're concluding.
My point exactly. If you understand your background, then you will know which case law to apply in your scenario. Do you see? Because on top of the machine that was broken down, we were told about how the insurer paid the 950,000 to Squeaky Clean. There is a case law about filling a hole, about using the amount that you receive to replace the broken machine. You are filling a hole. Do you understand? So which one is it? The belegging. Is it beleggings? Beleggings. Fourie. So that. Fourie. Beleggings. Okay. Yes, beleggings. Thank you, Yaku. Do you understand? So as you're reading, you're like, okay, but there is a case law like that. You also don't have to state, I'm repeating this, you don't have to state the case name. In second year, when I was doing second year, I got a mark for stating the correct court case name and also stating the principle. So I got 2 marks for that. I think they were just pushing us to know the case laws. Because in third year, they're like, no, scratch that. Do you see? Do you get it? So understand the background story and you will know which case law to apply. Are we good? So for those who are not sure even after attempting this unseen as well as the seen tutorials, if you're still not sure if you got your exam technique right, you're more than welcome to scan your attempt to see if you're on the right track. Consult with me. If you want your response via email, I'll do it. If you want a Teams consult, I'll do it, because this will follow you everywhere you go. And if you don't get it right, these are just 10 easy marks. If you don't get it right, then you'll be in trouble. And if you think if it was tested in test 1, then it will never be tested in test 2, you got it wrong. Find CTA friends, they will tell you from test 1 right until June, they were asked case laws. They were asked about case laws. Oh, you are very far. Ooh, you in second block. Okay, so the question in class is, when I'm applying the interest exemption for question 1B, right? Was I using section 101H or was I using section 101I? The answer is section 101I, because 101H deals with non-residents, right? When you look at, let's look at the first paragraph. It says any amount of interest which is received by or accrued to any person. You got it right for thinking that a company is included, right? But there's additional information which says that is not a resident. We can't even think about section 101H. We're looking at this one. We will cover it in second block. But yes, I was using section 101I to discuss how Squeaky Clean could not qualify for an interest exemption. Any more questions? Is it 101H? Do you have a tax pledge? Okay. Do you still feel like section 101H is the most appropriate section to apply? For an interest exemption. Okay. Oh, a resident.
Then it means the first statement does not apply.
So are you arguing this part?
Yes, a company does not qualify for
Exemption. Oh, okay. All right. I'm still confused with section 101H. Okay. So remember in the scenario, we did say Squeaky Clean is a resident company. So they're taxed on worldwide income, right? So when we read section 101H, it does relate to interest, but interest received by who? By a person who is not a resident. Because if we read it without breaking anything down, it says any amount of interest which is received by or accrued to